Hey everybody, it's Erik, co-founder, partner of Village Global, a network-driven venture firm. And this is Venture Stories, a podcast covering topics relating to tech and business with world-leading experts.
Hey everybody, welcome to another episode of Village Global's Venture Stories Web3 edition. I'm here today joined by a very special guest, Muneeb Ali of Stacks. Muneeb, welcome to the podcast.
Thanks for having me.
So Muneeb, by way of background, why don't you introduce what is Stacks and you've been very early to the space. Why don't you give a bit of a overview of your journey to where you are today?
Yeah, so Stacks basically brings smart contracts to Bitcoin. So if you think about Bitcoin, people might be familiar that this is kind of like a money layer for the internet. And then there are other projects like Ethereum that effectively built out smart contract functionality right at the base blockchain layer. And the thesis that we have is that, Bitcoin is actually winning as money. And it would be very interesting to try and make that capital productive, right? So it's like something like, $500 billion worth of capital. So if you bring smart contracts to Bitcoin, instead of the other way around, like what Ethereum is saying is that, hey, we have smart contracts, and at some point, Ethereum might start getting used as money. So in some ways, it's kind of like the opposite approach, that you have Bitcoin as money, and then you kind of like bring smart contracts to where the money is as a separate layer. And Stacks is that layer of smart contracts.
Awesome. Excited to get into that. But before we do, why don't you get a little bit of an overview of how you've navigated the idea maze? Because you've been working on this for quite some time, and you've had different ideas along the way. So why don't you trace us a little bit of the journey of the company and what you've learned?
Yes. So I think going back, I was a PhD student, and back in like 2013, I was doing my PhD at Princeton in distributed systems when discovered Bitcoin and was fascinated by it, right? Like it's almost like, especially if you work in the field of distributed systems, you see this thing and it just cracks a kind of like a unsolved previous problem. It opens up doors to like new types of things that can be built. And that got me really, really excited and started kind of like hacking on it. So the idea of building different types of applications or new use cases around the Bitcoin blockchain is as old as time, right? Because Satoshi, they were actually involved in some of those ideas, right? So people were talking about kind of like, I'll tell people a little bit about this project called Namecoin. So it was a new type of an application that is different from Bitcoin. So Bitcoin is very, very simple, right? Like Bitcoin, you should think of Bitcoin as all it does is it's trying to be money, and all you can do at the core protocol level, at the base blockchain level, is just transfer money, right? That's really the main operation that is supported. And if you want to build something else, if you're a developer, if you want to have some other type of functionality, for example, Namecoin had an idea that why don't we register domain names? So just like, you have on the traditional internet, you have CNN.com, Facebook.com. How about we do that at the blockchain layer, and that'd be much more secure and decentralized and censorship resistant and so on. And Namecoin basically implemented that almost as a merged mind layer with Bitcoin. I wouldn't go too deep on the technology side, but just to highlight that this idea of other types of applications can be implemented using this technology goes all the way back to Satoshi Nakamoto. And even in the early days of like 2011, 2012, which is a little bit before my time, there were so many other ideas of like what can be done on top of Bitcoin. And that's how actually Vitalik, the founder of Ethereum, started his journey as well, right? So not a lot of people know this, but initially Vitalik was proposing smart contracts on top of Bitcoin that can be actually change the Bitcoin code to try and support fully expressive smart contracts, meaning that instead of doing just like these transfer payment type transactions at Bitcoin, developers would be able to basically program anything that they want, which is a drastic change from how Bitcoin is designed. And I think that's the original argument or disagreement that started between the Bitcoin and the Ethereum community. And I think it's a very fundamental type of a computer architecture question, that Bitcoin is saying that you don't want to have that much flexibility and ability for developers to program anything at the base blockchain level. Because people on that side of the debate, they, and me included, think that that opens up like too many attack vectors, that makes your base layer really, really complicated. And you want to keep your base layer very simple, right? And Ethereum takes the position that these smart contracts are very, very powerful. And I think reality is always somewhere in the middle, right? It is true that the smart contracts are extremely powerful. We have seen that with the kind of like rise of Ethereum, with how many developers and users are kind of like excited about using these applications or are building on Ethereum. And we've also seen like tons of hacks and problems with these smart contracts as well. But that's the thing that I think most people notice at the high level. At a deeper technical level, what's happening is that the Ethereum base layer is becoming more and more complex over time, right? And even the Ethereum developers acknowledge that. In some recent blog posts, Vitalik was talking about, he was kind of like doing a retro of the past like 5-6 years of Ethereum, and was exactly hitting on the same subject, that he still thinks that Ethereum still has this decision to make, that does it want to be simple at the base layer and be more like Bitcoin, or it wants to be more experimental and more complex and be a smart contract platform. And that fundamental debate is really that Ethereum, is it trying to be money like Bitcoin, or is it trying to be a developer platform, like a smart contract developer platform? And there's tension between the two. One wants you to be durable and simple, which is Bitcoin has clearly picked that lane, right? Bitcoin is saying that it's going to be durable, it's going to be simple. And the downside of that is developing on Bitcoin is much, much harder, right? Because you don't have that smart contract functionality. And Ethereum is kind of like, it has picked different choices. So I think those are kind of like the design trade-offs. And they're extremely important. Like if you look at the market size of these things, we know the markets are a bit down right now, but Bitcoin simply as money just a few months ago was worth like $1 trillion, or Ethereum as a smart contract platform was worth around 500 billion. And then there are new ones, like things like Solana, Avalanche, and others, who are basically saying, hey, look, we're a better, faster smart contract platform than Ethereum. And they were gaining a lot of traction as well. So I think that's kind of like a landscape. And these are enormous markets, right? Like the market of like what is going to be the reserve currency of the world, or what is going to replace gold as an asset, that's like at least like a $10 trillion market. And what is going to be the next generation cloud, really, right? Like people can think of this as like decentralized computing. This is what these smart contracts are doing. That's potentially a very, very large market as well. So I think that's what these projects are doing. They're trying to build these things.
Yeah, that's a great description. I read recently that there's some critique of Ethereum that perhaps it's caught in the uncanny valley or the messy middle, where it's not as a secure, durable, all the great attributes that Bitcoin has. So it's not winning there, but it's also not going all in on the developer platform angle in a way that like Solana or some of these other programs are. And so if it's neither the best of either, maybe it gets the worst of both.
Yes. So I think, first of all, I think Ethereum deserves like a ton of credit, right? Like the idea that fully expressive smart contracts would be so useful to developers, like Vitalik and Ethereum pushed that forward, right? I was being a computer scientist, sometimes you're trained to look at how things can go wrong, right? Like you're always poking holes in things. And I was very scared of this architecture where people are effectively running untrusted code on somebody else's computer, right? If you're running an Ethereum node and I publish a smart contract that you have to run, it is somewhat similar to like someone is forcing you to download software from the internet and just run it on your computer, right? So the amount of kind of like malicious bad things that can happen, I think there's a big security attack vector. But over time, we've seen that at least the Ethereum virtual machine, like the VM that actually runs the code, that has turned out to be pretty rock solid, right? Like there haven't been a lot of exploits where there is an exploit at the VM level and then all sorts of like catastrophic things happen. There have been problems with the programming language Solidity that has certain drawbacks, and there have been lots of like hacks and thefts because of that. But the flip side there's always like, here's the power of the technology. Yes, there are potential downsides, but how powerful this technology is, that over the years, I've been completely convinced that smart contracts are just a game changer. Like it's almost like a new type of a computing platform. It's like how we had the jump from like mainframes to desktops. And when we got desktops, like new types of applications emerged. And when we got cloud computing, like again, a new type of applications, or we got mobile computing, we saw a new category of applications. It's like a jump like that, potentially bigger. So these are like new types of like developer platforms, and Ethereum has really pushed that forward. With that said, going back to your comment about Ethereum is trying to be two things. There is this meme in the Ethereum community that Ethereum is ultrasound money. Over there is trying to compete with Bitcoin, and then it's trying to be the best kind of like developer platform for smart contracts. So last cycle, like personally, I'm a Bitcoiner. Most of my kind of like crypto holdings are in Bitcoin, outside of kind of like my own project. And the way I looked at it was exactly that look, Bitcoin is better at being money, and some of the newer platforms like Avalanche or Solana, they are going to effectively like rise more, right? Like they have solved some of the challenges that Ethereum is like a bigger ship now, right? So it's harder to maneuver that. Like some of the features that Ethereum has been wanting to ship for a while, like projects like Avalanche or Near, they already have those in production, right? And they're already scaling, they're already faster. And so if your portfolio looked like Bitcoin as money, and then a basket of like Solana, Avalanche, Near, pick a bunch of other new L1s, you would have actually outperformed Ethereum because the basket of the L1s is gaining market share. And you can pick any metric that you want. Like it could be number of users, developers, it could be transactions, it could be market share. That basket is actually gaining market share on Ethereum in every metric you can look at, right? Because they're just trying to be one thing. They're just trying to be the best smart contract platform that there is, and they're small, right? And they're relatively going to grow more, just given the time we are living in right now.
Totally, and so you're sold on smart contracts. Do you think that? But you've just decided to build them on top of Bitcoin than Ethereum. So the critique of Ethereum is that they're trying to do two things. Do you think it's okay to do two things, but just Bitcoin has a better potential to do two things? Do you think Bitcoin also has the potential to be the smart contract platform, or how do you see that playing out?
Yeah, so I think the approach that Stacks has, in some ways, is actually very, very simple, right? The difference is actually very simple at a high level. All that we are saying is, so Ethereum is doing everything at one layer, right? Ethereum, the base layer, is trying to be money and has the smart contract platform. And we're noticing that because of scalability limitations, most of the computations are already moving to L2s, right? So there's so many projects like Arbitrum, Optimism, and some of the ZK work that is coming up, and all of that. So you're already seeing that maybe most of the smart contract functionality is going to happen at a different layer anyway, even on Ethereum. So what we are saying on the Bitcoin side is let's just try to separate out these layers more cleanly, so that the Bitcoin-based layer is the money layer. It is very simple, very durable. It is not going to change, and we are okay with it. And then there is a more experimental layer that has smart contracts, which is completely separate, right? So if I need to go, like if developers are asking for certain features and Stacks needs to upgrading Stacks relative to Bitcoin is a lot easier, right? I think in the community, there is discussions about doing an upgrade every 6 months or so, like having a kit itself, like just pushing upgrades. Bitcoin doesn't upgrade every like 5 years or so, right? So there's a huge difference between the two things. And I think that two-layer design, in many cases, like logically just makes sense. Like you just separate the concerns, like here's the money layer. And there might be many users who are only interested in the money aspect, right? They can just ignore Stacks. They're like, I'm not a smart contract user. I have nothing to do with this. They can just ignore it, and they can keep using the money layer. But there are people who are interested in smart contracts, and they can use Stacks, and then Stacks has access to the $500 billion capital that Bitcoin has, right? So you can actually make that capital productive, which is the thing that I think is probably the biggest criticism of Bitcoin, that right now, Bitcoin is effectively like it's not productive capital. It's just money that's just sitting there, right? Like I was describing this to people that if you download a Bitcoin wallet, there are basically two things that you can do with it. One is you can send a transfer, so you're transferring Bitcoin to somebody. And the second thing is do nothing, right? So you just hold. And I think that is the criticism that we see of Bitcoin in the Ethereum community, that what do you even do with your Bitcoin, right? Like these people are basically just sitting on coins and just talking on Twitter and, who's building here. And I think there are valid arguments in that criticism, that I do think that there's a big market applications that can make Bitcoin productive, that you can have build an entire financial economy around Bitcoin. And that's the work that we are trying to do. And we admit that the developer ecosystem around Ethereum is a lot bigger right now compared to Bitcoin. But I think those things can change. It's very, very early days.
Yeah, totally. When you say Bitcoin is winning as money, can you say more about what you mean by that, and what would need, like, what is the criteria by which you are deciding that, such that, what would need to change for that to change?
Yeah, I think it's a great question, right? So first thing is, just adoption in the real world, right? If you look at the El Salvador news, where, there's a sovereign country that is saying Bitcoin is legal tender. Like once, someone does that, and they have a cryptocurrency that is legal tender, there's very little incentive to do that for another cryptocurrency. Like they've already done it and it's hard and so on. And then there are network effects in it, right? So El Salvador was just the first one. Now there are others that are behind them. Similarly, I think Bitcoin being kind of like the first asset and being kind of like the more stable, time-tested asset is the thing that even public companies might be comfortable putting on their balance sheets as a hedge against inflation, for example, right? So that those things are happening. I think those network effects are very, very strong. But even I think at the technology level, the biggest kind of like difference between a system like Bitcoin and fiat money, which is issued by governments, is that how much control do certain parties have on the money supply, right? So if you're going for like really hard money, meaning that no one can change the supply, I think Bitcoin is by far the most resilient to that type of change, right? And it has to do with how Bitcoin was started. How many crypto projects are out there where the founder is basically nobody knows who the founder was and the founder disappeared, but the project actually survived, right? Bitcoin is the most like grassroots type of a project, and where different kind of like organic community members have just taken on the role of like, hey, I'm going to market Bitcoin, I'm going to promote Bitcoin, I'm going to educate people about Bitcoin. So if you look at the Bitcoin community, I think it's the most kind of like grassroots type of diehard believers. They are the ones who are going to go through like bear markets better than anybody else, right? Like other projects might actually take much bigger hits, but the amount of enthusiasm and true kind of like, they believe in the mission of Bitcoin and they're here for a cause. I think Bitcoin by far wins there. And I think it's even from a brand name perspective, like, your grandmother might know about Bitcoin, might not know about some of the other cryptocurrencies, but Bitcoin is kind of like crossing that chasm and reaching mainstream. There's a brand recognition of like, okay, I know what Bitcoin is. And I think it's important, right? So you combine those factors. The decentralization aspect is probably the biggest one, right? Because the one property that you're looking for over here is like how decentralized a project is, how resilient it is to change. And we know, like, for example, in projects like let's say Solana, where there's one large company behind it and the blockchain goes down, and people can very quickly coordinate to effectively do a hard fork of the system. And I think in Bitcoin, you can actually download software from like 2013 and run it, and it will sync to the current version of Bitcoin without any changes, right? So that type of durability, that look, if I'm keeping my money in the system, like a decade from now, the system will be there, and it will look exactly like how it looked before. And I think you just can't say that about a lot of other projects.
That makes a lot of sense. We've alluded to a number of it now, but I want to summarize or make sure we have understood the main crux of the differences between sort of the Jack Dorsey view of the world, and of course he came out with sort of his kind of Web 5 announcement last week, and the Chris Dixon view of the world. Like, what are the fundamental disagreements between those views, and maybe you're if at all you differ at all from the Jack view?
Yeah, so I think for certain things I would be on the Jack Dorsey camp, and even with the Chris Dixon view, right? Like, if you look at some of the early blog posts from Chris Dixon, like I'm talking like 2013, 2014, he understands Bitcoin as money. Like, he understands the Bitcoin's use case as kind of like a hard asset and hard to change and so on. I think the reason why you will see Chris's fund more active on the Ethereum side or some other projects, they're just following the developers, right? In fact, like, there's a lot of criticism of VCs, like in the Bitcoin community. My view is that VCs are basically doing what they've been doing for decades, right? Like, they see a new technology, they want to back the best founders, and typically you're taking the bet that, this team is going to go out and create something very valuable, right? The investment instrument might look different, right? Like, instead of equity in a company, it's now these tokens. And the thing that has really changed is that the market for these assets was regulated, and you would the public would only get a chance to like buy when a company would IPO, right? And with these tokens, like, there are a lot of kind of like shady characters who have showed up, and they're basically creating these things and selling them directly to the retail markets. And there's a very strong negative reaction from the Bitcoin community about that, right? That's justifiable, but I don't think you can basically throw the baby out with the bathwater, right? Like, there are founders who they don't care, like, in their mind, like, they're raising capital just like they would raise capital in a pre kind of like crypto environment, and then they're working hard to build something valuable, right? So you can't ignore those people, and I think there is a lot of talented people because the Bitcoin ecosystem lacks certain functionality. It lacks smart contracts. Actually, even on the developer tool side, the developer tooling isn't very polished. Right, and there are more developers currently working in Ethereum. It's just a fact. You can look at industry reports coming from Electric Capital, for example, where there are a lot more developers in Ethereum, and even like some projects like Solana, they might now have more aggregate number of developers than the entire Bitcoin ecosystem. So I almost can see both sides where why Jack Dorsey is doing what he's doing, and why Andreessen Horowitz is doing what they're doing. And the reality is always somewhere in the middle, right? And I think in many ways, we're trying to be that bridge. We're saying that, look, we understand that the developer traction is low on the Bitcoin side, and it's because certain basic things are missing, right? Like, you need smart contracts, you need really good developer tooling, you need talent, you need capital. Let's try to bring all of those things to the Bitcoin ecosystem. And then I think people would realize that, Bitcoin can be so much more than just money, right? It could be a settlement layer for a future for internet. And I think many decentralized applications could be built around it. And this is where I think some of the Bitcoin hardline thinking comes in, that there is a tendency to support projects that don't require a token, right? So it's a little bit like, these are typically people like, I know Jack is technical, but in general, there are a lot of like non-technical people in Bitcoin who would be like, I would use this technology because it doesn't have any token. Well, you're effectively telling developers what tools are right for them and what tools are not right for them. And this is not how free markets work. People are going to go wherever is the right tool to solve the problem that they're trying to solve, right? And I think I can give my example. Like, if you want to have a smart contract layer that is separate from Bitcoin, because you can't put all of this data in the Bitcoin layer, you can't modify Bitcoin itself, because that, I think a lot of people will agree that, yes, you don't want to modify Bitcoin, even in the Bitcoin community. But as soon as you start discussing that, hey, look, here's a separate layer, and this layer needs incentives for miners to actually operate it, right? And That's why there is a new gas token that is there to incentivize these miners so that they can keep this almost like smart contract data layer alive, right? And people kind of like hit a mental wall there, right? Because there is a hard technical requirement. And in the Ethereum world, like everyone will be very understanding. They're like, sure, it makes sense. Just like you need to incentivize the Bitcoin layer, just like you need to incentivize the Ethereum layer, you need to incentivize the stacks layer. So I think those are kind of like the trade-offs where it's a little bit of a purist mentality sometimes in the Bitcoin community, that instead of using the best tools for the job, they're looking to design their tools to avoid a new token, right? So it's not that they're not solving the problem of what's the best developer platform we can build for developers. They're solving a problem. What is the developer platform that we can build that does not have a token?
That's really interesting. I've heard the theory that there's something in the Bitcoin community where a certain group of kind of more aggressive people have gotten a lot of sway, and it's made the community just a bit more aggressive. And I feel like one of the things Web3, the term actually did, is create more of a schism between the Bitcoin community and sort of the rest of the crypto community, whereas before they were all lumped into the same thing. Is that your read of the history as well, or how do you sort of think about how that came to be, where the Bitcoin community started to be more? And what I wonder, Muneeb, is if that will affect kind of institutional investment. Like, if I could see Ethereum being more ESG, for example, like that kind of aesthetic, and will that affect institutional adoption?
Yeah, so I think it's a great question, and I think that the dynamic there is actually very, very complex, right? There are several actors and several reasons. Maybe it's worth like digging into them a little bit, because I do think I have a unique vantage point, given that I've just been in the Bitcoin community for so long. Actually, a funny thing is that I would be called a Bitcoin maximalist by a lot of people in Ethereum. And I would be told to go join the Ethereum community by a lot of the Bitcoin hardliners, right? So it's literally like, there are people yelling at you from two different sides. And I would humbly say that maybe I have a unique point of view here. And what I have seen is that first of all, I do think there is a use for that hardliner. We need to verify everything. We need to be skeptical of everything in the community. For it's kind of like the social defense layer for Bitcoin, right? So there's use for it, and that's why it becomes very hard to criticize those people, right? Because it's the same people who are going to jump in and basically block some sort of a technology upgrade that's happening on Bitcoin that is not thought through deep enough, right? So they're just imagine like people who might wear like tinfoil hats, right? And they're like, I'm just very careful. This is like my money, and don't mess with it, and don't make like changes that can have a negative impact. And that's the resilience. That's the social layer resilience that it is resulting in the decentralization of Bitcoin, to the point where everyone understands that good luck making any changes to Bitcoin. Good luck making any changes to the 21 million cap and so on. And that's a benefit. So I fully acknowledge that. And then I think it's the same people. It's a little bit like, you train warriors, right? And sometimes there isn't a war happening, right? So there was a war happening in 2017 where there was almost like a civil war internally where people were trying to increase the Bitcoin block size. There was a fork of Bitcoin, and these people defended Bitcoin. And now the party that was on the other side is basically, there's a very interesting stat that all of the forks of Bitcoin combined are worth less than 1% of Bitcoin, which basically means that Bitcoin has clearly won over all of the attempts over a decade of people trying to create a better version of Bitcoin, and some of the more influential people who went off and created like Bitcoin Cash and whatnot. So that's the benefit of the social layer. But once there is no war happening, these people they're trained warriors, right? And they're going to turn their attention somewhere, and they do kind of like give developers in Bitcoin a very hard time. They are constantly kind of like have things to say about everything else that's not Bitcoin, right? And the interesting dynamic over there is, because of the open, free nature of the markets, if you call everything that's not Bitcoin a scam, as soon as there is an actual scam, you will be right. And there are, in fact, like actual scams out there. So they actually get vindicated over and over again, right? So when the Luna collapse happened, right, it's a little bit like, look, here are the people who are telling you that this thing is risky. You should have only bought Bitcoin. And every cycle I've seen this. So for I think the first time I started noticing that, the hardliners are kind of like becoming more dominant in the Bitcoin community was around 2017. And it's when a lot of kind of like these new projects were coming in, starting new tokens, and then everything crashed. Every crash actually increases the strength of this community, because people who, like, imagine like everyone who loses money, like there are only very few people who actually make money, right? Like traders, some good, really good traders would make money, or people who are very disciplined would make money. A lot of people actually lose money in these bull runs and the crashes that happen. A lot of those folks, it's a little bit like they join the religion of Bitcoin after that, right? So they are the new recruiters, and in many ways, like it makes sense. Like back even in 2013. The advice that I would give to my friends and family, if they would ask me about crypto, was like, look, if you're thinking about putting some money here, don't put more than you can afford to lose. But the safest thing you can do is just buy Bitcoin. And the interesting thing is that advice is absolutely true today, as true as it was in 2013, right? Because you are getting exposure to an entire industry that is going to rise and fall with Bitcoin. Maybe some projects will go up more against Bitcoin during a bull market, but they're going to crash more when the market kind of like turns. So you're way better off just by getting exposure with the safest asset and just do that, right? So I think that's where they recruit like more people, and their relative kind of like importance and power actually grows once you see a bear market. And I wouldn't be surprised if that happens again, right? And I do think that in any kind of like, if you study any kind of like tribe, especially because of social media, like if you are very loud and very vocal and very controversial, you'll basically get more followers, right? So those voices are actually getting stronger. And I think this is something that we will kind of like have to live with. And a lot of folks like who are actual OG Bitcoiners, who are actually much more moderate, much more open to innovation and new ideas and so on, even they've been kind of like, kind of criticized in the new Bitcoin community, right? Like this is not the original Bitcoin community. And what we are doing now is that we are basically trying to have a revival of Bitcoin builders culture that I think has a subset of the larger Bitcoin community. And not everyone who's in Bitcoin is like that, right? It's like there is a subset that is very loud, that is very vocal. They do serve a purpose. So you can't like say that, hey, they shouldn't exist. And I think we will just need to evolve as a larger ecosystem. And my hope is that as the Bitcoin community just keeps on becoming bigger and bigger, like just like you would expect like more moderate people on the planet in general than people who are kind of like extreme and have radical views in either direction, I think things would likely become more moderate over the long term.
Well, that's well put. So I want to summarize. So my understanding is that you were building on Bitcoin instead of Ethereum because you believe the base layer of Ethereum is way too complicated or relative to Bitcoin, and that means Bitcoin is more decentralized, obviously, and that means that Ethereum is not as secure. Is it largely a security argument, or what's sort of the crux of why you prefer building Bitcoin to Ethereum?
Yeah, I think let me divide that a little bit. Like the first thing is, I would say, if you just put on your founder's hat and you say like, look, there is a market opportunity that not a lot of people are working on, right? And that market opportunity is that Bitcoin is a $500 billion asset and is completely passive, and you can just come in and you can make this capital productive. There is more Bitcoin out there than Ethereum and others, and Ethereum already has a much more saturated market for developers. Right. So the first thing is like pure logic, pure kind of like, put on your founder's hat. This is a huge market for several reasons, maybe also because like, bad tooling, but also community reaction. A lot of developers get yelled at, frankly, in the Bitcoin community versus having a very friendly, hey, we want to attract as many developers and encourage them to experiment however they want. It's a little bit like we want some developers who can pass the purity test, right? And they're only doing the things in a way that are acceptable to at least like some radical portion of the community. So I think that's just an opportunity. That's a massive opportunity, and I think we can come and try to capitalize on it. That's one. On a more fundamental level, I think the question really boils down to what's going to win as money, right? So I actually think that Bitcoin as money can be worth a lot more, right? I think 10 trillion is just the gold market cap. I think it could be worth a lot more as a hard asset. And if your thesis is that it's basically, I think someone can have the thesis that the actual value is in the smart contracts. That would be the inverse thesis from us, that the actual value is the smart contracts. And then whatever asset is being used as gas for the smart contracts will end up being internet money, right? That's the Ethereum thesis. That's why Ethereum is trying to be money. They're saying that with usage, and I think there's some truth to it, right? Like a lot of people who were buying NFTs in the last cycle, they were treating Ethereum as money, online money. They would just use Ethereum like that, right? So here's an interesting dynamic as well, that Bitcoin is getting adopted in the real world more as money. Like, for example, Lightning payments getting adopted by McDonald's and Walmart and so on. And Ethereum is getting adopted more as money in the online world, like NFT marketplaces, right? Like DeFi and so on, right? So that's the dynamic. And my thesis here is it's more important that Bitcoin is getting adopted as money in the real world, because the online stuff is still early and can change. So just like, Solana hopes that it can take over from Ethereum, or Avalanche hopes that it can take over from Ethereum, we think that you take the largest asset and just start using that as money online, right? So why can't NFTs trade against Bitcoin? Why can't Bitcoin be deployed as collateral for issuing a stablecoin, and so on, right? So that's kind of like the fundamental thesis, and if you're right there, right? So the thing about this is a contrarian thesis right now. So you need to be contrarian and right. I think if you're right there, that's the jackpot, right? Like we were contrarian and we were actually doing something that not a lot of people were doing in the industry, and then we ended up being right. But that is the core thesis. If that thesis is wrong, in the sense that money from cryptocurrencies is actually going to evolve from a usage perspective of smart contracts, then Ethereum has a massive, massive lead. And I think all the other players are basically trying to catch up to that.
Yeah. And when they say ultrasound money, what do they even mean? Like, let's flesh out a future world in which Bitcoin wins and becomes money, as you say, and another in which Ethereum wins. How could these two worlds play out?
Yeah, I think the way this plays out, and then I think there's a third scenario as well, that they both win as in their respective categories, right? So let's say that the analogy of the internet holds here, where in the early days there were many different types of networks, and then what we call the internet today came around and it won, and it actually won because it was very, very simple at the base layer, right? So TCP/IP is a very simple protocol. It just does one thing, literally one thing. It takes packets from one place and delivers it in another place. It doesn't even know what those packets are, right? And there were other types of networks who had more intelligence baked in at that layer, right? So they actually could do more complex and interesting things at that layer, and they never took off. And I think part of my thesis around why Bitcoin is going to win is motivated by those historical lessons as well. That typically simple base layers tend to be the ones that kind of like win. So in that world, you will see like tons of stuff built on top of Bitcoin, right? So Bitcoin is the largest asset, and something like Stacks is the largest smart contract platform, right? And then there are all sorts of things built on top of Bitcoin. There's a very, very healthy kind of like ecosystem. So Bitcoin, I'm not saying like other chains won't exist, but it'll be like the center of gravity is Bitcoin. Like it's the world reserve currency. A lot of kind of like applications like settle information eventually on Bitcoin. So people would, like, for example, if I'm selling you an NFT, you would go and try to verify that this NFT actually mine on the Bitcoin blockchain. And if something is not settled on Bitcoin, you would be very much like, I don't trust this information because it's not settled on Bitcoin. So it's the ultimate kind of like source of truth for the entire world, right? And that's the Bitcoin world. And I think on the Ethereum side, it's effectively what I mentioned earlier, that the smart contracts end up being the much bigger market, right? So it's possible that Bitcoin takes digital gold as like a 10 trillion asset or something, but the market for a global trustless computing platform turns out to be 100 trillion market or something like that. So there was just a lot more there. And then the asset that is native over there is the thing that, like people, like, kids who are like 3-4 years old right now, like what is going to be the most natural thing for them when they're teenagers? Like, I think that's the question, right? Just like there were people who just grew up with the internet, they would never even think that there were other designs that were competing like at some point. So I think the people who are 2-3 year olds today, like when they're teenagers, there will be some sort of a native internet currency, and maybe there are multiple ones, but I think what would be the largest one is the question. And I think in that world, because Ethereum is where all the applications went, in Ethereum, when it will look like ETH is something that is very native to them, and that's the thing that they use. And it could be something else as well, right? Like that's the other question that I think about a lot. That which out of these two have a bigger moat, right? Like, do smart contract platforms have a bigger moat, or is a money layer is something that has a bigger moat? Right? And again, I gravitate towards the money layer actually has a much bigger moat than smart contract platforms.
Yeah. It's interesting. Someone like, Kyle Samani came on the podcast recently, and what he was saying is that he was sort of advocating for more of the progressive decentralization element, that, hey, we're still figuring out what is the perfect design. And he thinks Solana is experimenting the fastest, and they're going to figure it out and then lock it in and decentralize. And it's not that one thing has to be decentralized from the get-go, but that you can figure out sort of the perfect design. Is there any merit to that view in your view?
I think there is some merit, right? Like it's a little bit like, even if you look at how Bitcoin launched, like really, really early days when there were like 5 people on the network, it was more centralized, right? And they could coordinate more with each other, and they could experiment. So even you could argue that Bitcoin has decentralized more over time. I do think that some of these things about, I'll bring up 2 things. One thing is that I think being able to experiment a lot is a really good property to have for a smart contract platform. It is not a good property to have for a money layer, right? I think for a money layer, and that's where the fundamental tension is. For a money layer, what people want to know is that this thing is not going to change. Like, it's like, for example, Bitcoin is like, the story is so simple. 21 million Bitcoin, never going to change, right? Ethereum is actually experimenting a lot. They're burning their supply. They're introducing different issuance. They're doing a lot of experimentation to then say that, hey, look, this thing is actually going to be deflationary over time. It's a very intellectually interesting thing to play with. The argument I would make is that to an ordinary person on the planet, simple and durable is actually way better, right? Whereas like, hey, 21 million, nothing else is ever going to happen. You don't even have to think about it, right? Experimentation is good for a developer platform. Right. So Solana as a developer platform, if they're experimenting a lot and they can decentralize down the road, I think that could work as a developer platform. And then everything is a spectrum, right? The issue is, were you too much on the centralization side to the extent that people like serious builders who care about decentralization and who think that the main value prop here is actually decentralization, you are basically just keeping them out, right? And the type of people that you're attracting are the folks who are maybe more interested in the money during a bull cycle, right? Than actual true decentralization and building something like foundational that can last for decades.
Yeah. Speaking of sort of sentiment, let's close by talking about the markets. So we're talking in mid-June. The markets are collapsing. Not just crypto, but all markets. Ironically, the best places in cash, as some people are saying, even though inflation is over 8%. And so, a couple questions. One is, how do you make sense of what's happening now? You've been through a few cycles. One of the hopes for Bitcoin was that it was going to be a hedge against inflation. and maybe it will be in the future, but it isn't currently today. I'm curious how you think about that. And then also you mentioned Bitcoin is still the best bet. Some people might say, hey, what about something like Coinbase or something else that represents kind of a basket of different currencies, just because it's not clear that Bitcoin is the winner, as we've been talking about. What are some of your thoughts on some of these high level questions?
Yeah, so I think for the markets, I would say that in some ways, like crypto is just following the cycles that it does, right? This is the time, if you look at traditionally how long the bull markets last, like I was doing a similar analysis back in March, and even though I felt that we haven't really seen a blowout top of the market, I just felt like the time has expired, right? Like historically, the bull markets last for this long. And so part of it is like, hey, it feels familiar. Yes, we have seen this story before, but I definitely think like there are some new elements as well. Like for example, this time the bear market coincides with a global crash and potentially a recession, right? So I don't think we've seen that before. That it's like you're getting hit from two sides, right? So what the new dynamic would be, we don't know. And I also think that in terms of like Bitcoin, I think it's the simplest thing, right? Like where people like imagine early investors in Coinbase. I think Barry Silbert was doing some calculation when Coinbase IPO'd, and this is at the high level, right? Like not the Coinbase price today. And he did some calculation and basically said that, hey, if I would have held Bitcoin, I would have made slightly more money. Like not a lot of more money, but slightly more money. Just buying Bitcoin would have been the best thing. Obviously, there's a different argument. Like back in the day, the industry was so small that Coinbase actually needed capital, and Coinbase has created a lot of value in the industry. So you need investments in these companies. But from a purely investment perspective, I think it's actually very, very hard to beat Bitcoin. Also, not just hard in the sense of it's hard relative to how much risk you're willing to take, right? So it's the least risky, best performing asset in the crypto industry, like by far. And I think unless you are a very sophisticated fund who can actually do a deep dive on a lot of complicated protocols and can build out models and hedge yourself and so on, like if you're willing to do like a lot of work, you're way better off like just buying Bitcoin and forgetting.
And so maybe in words of closing for, it's a lot of people's first bear market. Been through a few. Any advice for people in terms of how to stay sane or how they should act or what they should expect?
Yeah, I think bear markets are the hardest on people when it's the first time that they're experiencing it, because the first time is the time when you're actually down in dollar terms. So it feels like you've actually lost money, right? So it's a little bit like you can talk to the OGs, so to speak, but they're not in the same boat as you, right? Like their cost average is a lot lower for somebody who got in 2 cycles before or even 1 cycle before, right? So first of all, we need to acknowledge that the people who are hit the most are the ones who just joined. And it could be more than investments as well. Like you just decided to join a crypto startup and you had a stable job, and now suddenly that startup is having layoffs, or you feel like you've made the wrong move or something like that. So I think that's we need to acknowledge that. Like it's a hard time for a lot of people out there. With that said, there's no guarantee that these markets are going to come back. But I can tell you this much, that Bitcoin is either worth a lot or it's worth nothing. Like it's not going to just hover around in this category. It's a technology, right? Like either it's going to die off because it didn't get adoption, or it is going to get adoption, like mainstream adoption. And on the adoption curve, we are very, very early right now, right? So just from that perspective, and at least we have some historical data. We have seen that this is how these markets work. They go down, they recover in roughly 2 to 3 years. And I think you will notice that people who stick around during a bear market, it's a great filter, right? Like it's basically the mercenaries go away and the mission-driven people who are intellectually interested in these things, they kind of like stay. It's actually like a great time if you're a builder, if you truly believe in these things, like the level of like noise and distractions just goes down, and you feel like you can actually focus on like work and get a lot done. And those are the people that always get rewarded, right? Like if Solana was the best performing asset last bull market, you should talk to the founders of Solana, and they will tell you that they started in 2018 in the bear market and people were barely giving them money to even get started, and they were forged in the bear market. And I have similar experiences as well. So I think anyone who looks like a successful person in crypto, like they have gone through these bear markets and they've actually built through them.
Yeah, that's an inspiring way to close. For builders who want to learn more about Stacks, where should they go?
Yeah, so I think people can find more information on Stacks at stacks.co, that's .co. And I'm fairly active on Twitter. I post about it all the time. And I am at Muneeb, Muneeb, which is my first name.
Muneeb, this has been a fantastic episode. Thanks for coming on the podcast.
Awesome. Thanks a lot for having me.
If you're an early stage entrepreneur, we'd love to hear from you. Check us out at villageglobal.vc.